Shares of Snap soaring today, 9%. That's after the social media company announced it would cut 20% of its staff as part of a sweeping restructuring plan. Our next guest says it should help the stock if and when a slowdown hits. Joining us now, star venture capitalist Rick Heitzmann of FirstMark's Capital. It's good to see you again.
Hey, Scott, how are you?
I'm good. I remember our conversation after earnings. You hit him with a sledgehammer. Does this, now you put on kid gloves now? I mean, how does this move match up with what you think here?
No, this is exactly what they should have been doing. This is exactly what the best companies have done over the course of 2022, is your cost of capital increased tremendously, and Snap was probably the last company to take action on it. Snap grew their employee base over 100%, during the first 2 years of the pandemic and never had announced the layoffs. And now what this shows is Snap's taking the macroeconomic conditions seriously, thinning down and focusing on the key priorities.
Is the story intact?
It is intact. It isn't. I think they were losing focus. They were focusing on drones. They were focusing on all these other projects. Now they're back to their core business, AR, communications, ad-sponsored content, and I think what they're going to skinny themselves down and focus on what's going to get them through the recession.
What do you make of this new COO position? I'm wondering if it takes a little bit of the onus off of Spiegel, what it means in the big picture. I'm not saying it's an unusual move, but maybe it's just unusual in that it happens now. What is it a sign of?
I'm not sure what it means. I mean, Evan has always been a product-focused CEO, and a lot of the great entrepreneurs, founder CEOs are product focused going back to Jobs. And, to bring someone in from the technology side to kind of sit between operations, product, ad, and technology is an odd place for them to bring someone in. But I don't know him well enough to know what the real role is going to be. But obviously, everyone's going to need more support if we expect a downturn.
But you don't take anything of it, for example, that it's a sign of a step back in any way from Evan?
I don't believe so. I assume the questions that he's going to get are to that effect of, he lost two key executives today. They went to Netflix to run the ad-supported side of Netflix, and they might have needed to have a battlefield promotion. Okay. And that my guess would be Evan is completely locked into the future of the company, and they need a battlefield promotion to rally the troops and to focus them going forward.
I got you. I spoke with Glenn Kacher the other day of Light Street. Tech investor, venture capitalist like yourself. I asked him about the current environment, what he makes of it here, what he thinks is going to happen going forward. I want you to listen to what he said about the pullback in many parts of tech and what he thinks happens from here, and then you can opine on the backside of that.
Sure.
This seems like a incredible buying opportunity for our industry, and so we're incredibly positive, and we like the portfolio that we have built to come out of the current environment that we're in right now. We're kind of bouncing along a bottom here, and expect that ultimately when investors decide to come back and take more positions in this sector, that we're in the right stocks that are going to benefit greatest from that re-rating.
Oh, what do you think of Kacher?
I think the key thing he said is if you're in the right stocks. So I don't think this is a broad-based, the market's going to continue to rise after Labor Day and everybody's going to be rewarded. I think the best companies are going to continue to be rewarded. As we think about FirstMark and what we're going to focus on kind of after Labor Day, back to school, back to work, period, it's going to be how do you identify which are the babies, which are the bathwater, to use an analogy that we've used over the last year, and which companies are really the most excellent companies who are going to benefit in a downturn and are going to continue to execute because they have strong leadership, and which companies might have succeeded just because the tide lifting all boats in the last cycle, but might not be strong enough to really survive and thrive in the coming downturn.
I've asked you before to sort of game out the Twitter Musk deal.
Yes.
The whistleblower thing, does it change anything in your mind?
I think it's noise. I think it's noise. I don't think it goes to the core problem. If they're still trying to focus on the bots, if they're trying to focus on, they're misincenting the executives to not count bots, I think that's a small part of the problem. And I don't believe it's going to be material enough to get Elon out of his problems.
So deal happens as is written?
I still think they still cut a deal. I think there's going to be some compromise. The Delaware courts can't afford to lose it on appeal. Elon can't afford to have this continue to keep going, especially the direction the Tesla's going. There's going to be a compromise deal in which Elon buys the company is my guess, and it's been for the last 6 months, but we're probably going to find out in about 3 more.
Look forward to that. All right, Rick, thank you. That's Rick Heitzmann joining us today.